Hi guys, how's it going? I hope you have an amazing weekend. So let's look at DXY just now, the quarterly chart. As I mentioned in my previous video, that this sideways movement looks like an original consolidation in a market maker buy model. First push sideways, another push sideways, and we might be seeing another market maker sell model happening on the quarterly chart. If you look at the monthly chart, as I mentioned previously, guys, we have a bullish monthly fair value gap. Price rejected off of this and started moving up, taking out this liquidity, which I was expecting previously. On the weekly chart, we have 8 weeks of bullish price action, and now price finally gave us a healthy bearish candle, rejecting off of the monthly bearish fair value gap. So this is a very sensitive area in here, because this is the time when we will see whether price wants to follow up and give us a bigger market maker sell model, or giving us another push to the upside on the monthly chart. So price reached the weekly bullish fair value gap. Let's look at the daily, and also it giving us a daily SMT for long. So price actually can just push up from here, or it might be reaching up for this weekly bullish fair value gap. In that case, if it wants to move lower, what you need to be looking at is Monday, probably Tuesday London session. Price moving up, create some liquidity, take it out, and then just move lower and lower. However, if this will be respected with the daily SMT for long, you might be seeing the price messing around on Monday. New York session, red folder news at 10 a.m. This might be pushing up price higher, and then on Tuesday, London session, we might be getting a trade in here long. That's DXY just now. Let's look at EURUSD. So this is EURUSD, guys, on a 15-minute chart. And before I analyze and forecast what I'm looking at for the week ahead, I'd like to show you this whole week of price action, what I was looking at and what I was thinking as price was developing the whole week. So this is the weekly opening line. You see this purple line. Price has opened on that level and dropped down and created us this sharp low, which is a strong low at the time. Started moving up higher, and if you look at the 1 hour chart, this break of structure wasn't really convincing for me. So I wanted to see whether price is going to reject this 1 hour bullish BPR, which actually it did, and it wouldn't have given us a trade even if we wanted to trade this. It just gave us this sharp move up, rejecting off of this 1 hour bearish fair value gap, and gave us another strong high. So whenever price is giving me a strong high and a strong low, I always just move to the sidelines and see which one will be taken out first. When I woke up on Tuesday and looked at the chart, I saw this price action, and this immediately has put me off. Why? It's because this is the dead time, and price made this 80-90 pips move to the downside, and also Asia session was incredibly high volume as well, like 60 pips or something, and also price took out this strong low and rejected off of a 4 hour bullish fair value gap, giving us another strong low. So whenever I see price action like this, I already knew that I didn't want to trade during London session, because what happens after a volume like this, that price probably won't be respecting your normal levels. So I just moved to the sidelines, and what I saw, that price moved up, didn't respect this high either, and created another strong high there, rejecting off of a 4 hour bearish inverse fair value gap. So now we have another strong high and a strong low, Monday low of the week so far. Price came back down and rejected off of this 1 hour bullish BPR during the dead time. And then when Wednesday opened up, you can see that the weekly opening price has been respected very, very nicely. London session moved up again, stopped close to Tuesday high. So this is a drone of liquidity. I knew that this will be taken out. So during this New York session, I was expecting price to jump lower, take out this liquidity, give us a break of structure, and then just trade it from there. Price didn't want to drop this low, moved up higher, and actually tapped into the daily bearish fair value gap. And if you watch my previous video, you remember I was telling you that if price won't be respecting any lower time frame fair value gaps point of interest, then it's probably moving up to the daily bearish inverse fair value gap and most likely to the weekly bearish fair value gap. So at this point, again, when Friday opened, I just wanted to see whether price will be moving up to the weekly bearish fair value gap or this high will be respected. So originally what I wanted to see on Thursday is price moving down, take out this low, tap into the 4-hour bullish fair value gap and move to the upside. This never happened. Thursday gave us a sideways movement, and then when price opened on Friday, you can see that price gave us liquidity just above Asia high, and price actually took out Thursday high as well, giving us another strong low. So if you jump down on the 5-minute chart, actually, what you can see is that price didn't make a convincing break of structure on the 5-minute chart. However, I wanted to see whether these levels, which are 15-minute inverse fair value gaps, will be respected or not. And price actually respected this fair value gap, so we can delete this. And then I moved down to the 5-minute again, and price, after rejecting off of this level, gave us a sharp one-sided movement, again giving us a full break of structure on the 5-minute. So I actually decided to enter this trade. So I measured this leg. At the 50%, we have the fair value gap. It's coming from a daily bearish inverse fair value gap, gave us a lower time frame break of structure. We have lower time frame order flow going on there. So I entered just after London session. I got triggered in. Let me delete this. And then what exactly happened between the two sessions is that price made an internal break of structure to the downside, just there, gave us a high, a new low. These are all internal structure levels. And price raided this high and then gave us a break of structure. In fact, it was a full break of structure because it broke London's low. So at that point, I knew that I don't want to be in the trade anymore, because if this high, which was a raid of an internal high, will be taken out, that the trade idea is totally invalid and I don't want to be in this trade. So after this low was broken, especially that low, I just moved my stop to a break-even level, and I got taken out here. So this is totally okay, guys. It made sense based on a higher time frame, lower time frame. I was following the price and took a break-even. This is totally okay. So let me just clean up the chart and show you what I'm looking at for the week ahead. Alright guys, so before I'll show you the lower time frames, I'd like to show you one typical characteristics of the price. So price often do just follow order flow, and then instead of following the order flow, creates a bull trap, taps into a higher time frame, maybe a weekly or monthly fair value gap, and then starts moving to the downside from there. And you can actually see the exact same price action what I was talking about in here. So you have a daily order block, and instead of rejecting off of this daily order block or the daily fair value gaps, price actually was just keep moving higher and higher to this weekly bearish fair value gap, and then sharply started moving lower. So I expect something very similar in here as well. As I mentioned, this daily bearish fair value gap, I opened the trade from here. However, price just couldn't break this 4-hour low, which tells me that price doesn't really want to go down just now. So I don't think that this bearish fair value gap will hold the price. So it will move up to the weekly bearish fair value gap, and then we can probably short it from there. So how price is going to get to the weekly bearish fair value gap? I think what can happen, and this is probably the only long trade idea I'll be interested in, if price maybe wants to just keep going down, break this low and this liquidity overall, tap into this 4-hour bullish fair value gap, and give us a 1-hour, 4-hour market maker buy model from here. So this will be the sell side of the curve and this will be the buy side of the curve. Apologies for my drawing, but I think what most likely can happen is that price, as it rejected off of this 4-hour inverse fair value gap, will be just keep pushing higher and higher and higher. The only negative thing that we have a daily SMT for short at the moment, because as I showed you, DXY is already tapped into this weekly bearish fair value gap. So this is the only negative, but I think price will be moving up higher. And then what you need to see in here is that a sharp high, liquidity taken out, and a sharp high to be formed, and then you want to be trading to the downside. Another idea what can also happen is that price move up and then will be giving us these weak highs and then do this. If you see this, this is a liquidity isolation, guys. So this high will isolate this liquidity, and even though this looks like equal highs, this is an isolation because it gives you weak highs, takes out some of the liquidity, isolates this liquidity, and then you can just trade it there easily. Okay, so this is what I'm looking at for the DXY. Any questions, drop it in the comment box below. Enjoy your week. Take care.